Are you an e-commerce brand talking about growth planning for the next year? Right now, it's December when I'm recording this, and a lot of brands have been talking about their 2026 or next year plans for a few months now, and many of them post BFCM in December are going to be talking about it even more. And one of the most under talked about elements of an effective growth plan, in our opinion, is often inventory. So for some brands, this may not apply as much, especially if you're a, relatively low SKU count store. Maybe these are often highly replenishable. You often have less risk on the inventory planning side. But if you're a brand that is high SKU counts, there's a lot more risk. But not only is there more risk, but getting this right also can heavily impact the upside potential your business may have. And a lot of these principles also apply for low SKU count stores. They just maybe have a little bit less leverage in terms of their final impact to trying to get where you want to go. So, firstly, when we're talking about inventory and marketing, a few key things to remember. At the end of the day, most marketing teams are thinking about ROAS, cost per purchase. But the reality is that if you have the wrong stuff, you may not be able to scale. And the reason why is because if your most effective SKUs are poorly stocked or incorrectly stocked at the wrong time, you cannot scale what you can't ship. You don't have those items to sell. So you may be forced to try and move less effective inventory. So having your kind of core acquisition SKUs in stock is critical. And also having a workflow in place to identify what your next best acquisition SKU may be is also important because ultimately it's not just ROAS, it's also incrementality and how much volume you can push through a specific SKU. When doing inventory planning and trying to find like which category, which SKU do I go heavier on next year? It's not always as simple as looking at which ones have the best returns. It's a mix between seeing what kind of meets the threshold of your minimum viable acquisition ROAS or CPA, and what also have the velocity to actually show you the opportunity that you can potentially do a whole lot more. Basically, do you see those sales in a very compressed amount of time when you tested some of these new SKUs? And this pain point is not always super common for every single brand, but for high SKU count stores, when you're launching a ton of different sizes, SKUs, variants, collections, and there's so much data, having a kind of a filtering mechanism in place to identify the opportunities can be super critical. On the flip side, that's more talking about upside. You also have the capital cash trap at play. And this is when you potentially have stock in or excess stock in SKUs that are not as productive. And a very simple example is that if you buy 100 items of something and you sell 50 of them in a certain size, color, or variant super profitably, but the other size, color, or variants do not sell well, you can have a cash flow mismatch where you're profitable healthily on that initial kind of sell through of those 50 units, but you haven't got your entire cash out of that initial PO potentially if you haven't moved the majority of the excess in the non-profitable or efficient variants. So when thinking about the strategic deployment of your dollars to buy inventory, it's both the offense and a defense game. How do I make sure I'm minimizing my risk on the effectively the assets, the inventory that is maybe a little bit riskier, has lower sell through. Maybe it's more of a retention play where small subsets of my customer base are going to move X, Y, or Z units. And then how do I also position my inventory planning on the offensive to give myself the upside potential? And it's all relative to your balance sheet, your cash position, how aggressive you want to be. But when it comes to marketing, it can have huge impacts. Doubling down on one of the silent killers, overstock. So you want to make sure that when you have overstock, you have some sort of a plan in place to move it. So this is going to be different for every single brand. But let's say you have, you're on average moving through units in your warehouse in, I don't know, 45 days. There should be some sort of a workflow in your organization for when you basically surpass a certain number of days inventory on hand, or it's taking too long, or there's some metric that is not looking good in terms of how fast you're moving through some of these units. You have to have effectively a liquidation strategy. And a liquidation strategy does not necessarily mean go and lose money to move it. Ideally, you move it with profit, but you can kind of work through the list. So for a lot of brands, this might look something like I'm going to try to move it on email first, and then SMS, and then email and SMS with a discount. And then depending on how overstocked I am, do I want to push paid behind it, even if it's not that efficient or effective? It depends. how bad you need the cash out of that inventory, and if you could fundamentally use those dollars more efficiently to get a better return on those dollars than having it just sit on your balance sheet. Um, Oftentimes brands with high SKU counts, once they identify winning SKUs, they want to deploy more assets or more cash, I should say, sorry, towards those high performance SKUs. And sometimes to do that, you have to basically find a way to get cash out of some of your pre-existing inventory. And having a system and workflow in place to identify the opportunity and the opportunity cost of not doing it is very, very important when thinking about connecting inventory planning and marketing. Additionally, you want to identify what I would call your high incrementality SKUs. Incrementality is one of those buzzwords of the year, but it is incredibly important. And it doesn't only apply to marketing on your ad creative or your platforms, it also applies to your SKUs. So, back to what I was saying earlier when it comes to thinking about how you decide which SKUs to potentially bet bigger on in your inventory planning. It's not just which SKU gave me the best ROAS. It's which SKU gave me the best incrementality as I scaled spend. Because at the end of the day, if you can spend 1K a day at a 2 ROAS, but you're actually okay with a 1.5, you might be way better off spending 10K a day on a specific SKU that can get you 1.6, even if the other SKU loses incrementality after 1K. And it's rare that the incrementality becomes unviable after $1,000, but just giving that example to kind of paint a picture. But you have to think about, how do you identify those high velocity SKUs? Well, for some stores, maybe it's as simple as you literally tested it and you launched a new SKU or a new collection or a SKU within a pre-existing collection. You scaled it up and you saw that it was really incremental. But for a lot of high SKU count stores, when there's so many items, and maybe not every single PO is so big that you really feel it. Think about brands, maybe you're a brand where you run a lot of catalog ads on Google or Meta. You have to kind of look through the data to actually see which of these SKUs actually had high velocity for the maybe short amount of time you had them. Because if you bought a ton of different variety, it's possible that you actually had one SKU that for like 3 or 4 days picked up on ads and sold out really quick. And maybe it wasn't a top seller, but maybe it was actually a fairly respectable seller. You have to kind of think about your product planning in these cases as like an index in a way. How do you want to adjust the mix of products that you buy, and what is the reinforcement or the process for continuously trying to learn and optimize the percent of dollars for inventory that go into X, Y, or Z category, and then leveling down from there on SKU. And if you can effectively determine which of these SKUs are going to have potentially the highest upside, these are the things that allow excess scale. Obviously, you have CAC to LTV, you have compounding cohorts when doing your forecasting and growth planning. But in a lot of cases for high LTV or sorry, high SKU count stores, the real name of the game is, how do you find these like scale enabling SKUs, so to speak. And the mistake you want to avoid again is overstocking heavily on the products that don't sell super well on ads. Because if you allocate your dollars into that, that can not only potentially hurt your P&L, but it can actually also potentially hurt the ability to grow and in turn impact your P&L negatively. And if I had to kind of summarize it very simply, the name of the game when it comes to kind of figuring out where to allocate those dollars is firstly finding those high incrementality SKUs. So again, it's a balance. You want to make sure you have the SKUs that work well on acquisition and the SKUs that work well on retention. And a lot of times brands try to bet too big on growth, and you really want to make sure that the inventory plan that you're kind of committing to makes sense from a cash flow standpoint and a risk management standpoint as it pertains to how it relates to your balance sheet and current financial position. However, once you've identified a system for liquidating the overstock and you're kind of managing risk by not overstocking on some SKUs that are inherently more risky, once you have a system in place for finding these high incrementality SKUs, you want to make sure that you're then going and stocking them appropriately, not underbuying them, not buying the same thing necessarily that worked last year, but based off of the data, potentially shifting that mix a little bit to give you more upside capability for this season. And then how much do you buy? That's a bigger question. But at the end of the day, it's often going to be some analysis on cash conversion cycle in terms of how much you can afford and how you're going to effectively finance that. Once you have that stock, you have to find the balance between profit and sell-through volume. So if you actually get this right, it's possible that you're going to have some SKUs that do great. And that is the whole purpose here. But you want to make sure that you're not spending excessively. One thing we'll frequently see is when there's a new winning product, brands will basically sell out of it in 3 weeks, but maybe the new stock's not coming for 6 weeks. Would you have been better off just selling it out slower over those 6 weeks? Having a plan in place where you connect inventory to marketing really is inventory, and having that communication on an inventory level. And then once you're pushing ads, you're basically trying to acquire the max number of customers that is economically viable. So if inventory is not the constraint, CAC to LTV and variable margin, gross margin becomes the constraint. And then if you're doing all of this well, the ideal end outcome is this workflow is essentially what allows you to have the best cash flow and have your cash coming back to you faster so you can reinvest that back into the next best inventory to get you the best return on invested capital. Um, One way to think of this is like when you're buying inventory or doing inventory planning, you almost put your investor hat on a little bit, and each dollar you put into inventory is effectively a dollar that you're trying to go and get the best return on invested capital. And if you kind of look at it in silos, sometimes this can favor retention products, but there's only so many people you can sell retention products to. So it's a balance of those safe bets, it's a balance of the high incrementality bets, and it's a balance of making sure your bets aren't too big to a place where it can potentially get risky from a balance sheet and cash flow standpoint. So here are some things that we think brands should be thinking about on the inventory planning going into 2026. We think this impacts marketing so much when you're a high SKU count store. And best of luck to everyone. Thank you.